If there was ever any doubt, proof today that Australia's property values are among the most expensive in the world.
The International Monetary Fund has warned global central banks they need to keep house prices under control.
There's no denying Australia's property market is hot, with the median capital city home seeing a near 11% price increase over the last 12 months. But some areas may be overvalued, particularly where demand isn't growing and without proper infrastructure.
Look, I think you could say that in some precincts, particularly in the city precincts, we've probably got 10, 15, maybe 20% of an overpricing, if you like, or an expense factor. That is the deviation from the rate of growth in income. And don't forget, wage income has been growing at very, very subdued rates in the last 5 years.
The International Monetary Fund says some OECD countries have seen house prices go through the roof, with Australian property ranked as the third most expensive when you take incomes into account.
We're certainly pushing up against the historical high. We're around about 4.3 times incomes is required to get into the property market.
But price to income ratios are just one factor in determining housing affordability.
We don't have an excessive rate of credit growth going on, and we have got some evidence that housing price growth is actually cooling.
Prices in Sydney and Melbourne actually fell last month, according to RP data. The Reserve Bank isn't too worried about the housing market just yet and is trying to jawbone prices down by publicly warning home buyers that values can fluctuate. Failing that, it has room to move with commercial banks.
It can, through APRA, decide that it's going to increase the capital charges for lending, particularly for investment property.
And it can influence any new rules impacting property investing through self-managed super funds.
They may actually be driving unsustainable house price growth.
What the RBA won't be doing is adjust its monetary policy settings. Today's labour force data, which showed no change to the unemployment rate of 5.8% in May, just adds to the case for a period of stable interest rates. Ricardo, Goncalves, SBS World News.